for a look at JD.com's quarterly results. I want to bring in Henry Greene, investment strategist, Crane Shares. Henry, you always have great insight. Thank you so much for joining us this morning. Let's talk a little bit about these latest results. So revenue for the quarter converted to dollars coming at more than $41 billion for JD.com. That's up more than 15% on a year-over-year basis. Stock is moving higher today. What's your take on their latest results?
Yeah, hi, Diane. Thank you for having me. As always, it's good to see you. Yeah, JD.com had a really solid quarter in the first quarter. We're seeing that nice increase in revenue growth along with higher than expected profitability, actually. And a lot of that is driven, of course, by the consumption subsidies, specifically the appliance trade-in subsidies, given in the form of a tax rebate to Chinese consumers. So JD's always been number one, super strong in that segment, specifically home appliances. So they've been the number one beneficiary of these measures, which were also expanded to include personal electronics and many other categories. The one thing to look for is they've been really pushing to expand in food delivery. Food delivery is now the new battleground, so to speak, among China's internet giants. And JD has been, they've started to spend a lot to increase their market share, coming out with their brand new JD food delivery service. So we're going to have to see over time how that impacts margins. But now for the time being, JD has really not recovered as much as other China stocks. It certainly hasn't recovered as much as our China Internet ETF, ticker KWEB, which holds JD, after that is recovering after the April 2nd Liberation Day tariffs. Now, this could be significantly positive for JD stock, just because I think that investors are going to realize that they have very little exposure internationally. I would say among the top e-commerce names, certainly compared to Alibaba and PDD, JD probably has the least US and international exposure. They're mostly geared towards China's domestic consumer, which continues to rebound.
No, you make a great point, and I just took a look at shares of Alibaba. They've certainly outperformed JD year to date. But when you think about the subsidies that you mentioned, how sustainable is that strategy, especially when you think about the consumer recovery in China?
So I think that from the government standpoint, from a fiscal policy standpoint, obviously the subsidies are fiscal policy. China's in a pretty strong position. They've got a lot of dry powder. They're certainly in a stronger position to ease policy than the U.S. and Europe. That's been the case for the past year, continues to be the case. And you see them really ramping up stimulus, cutting rates in response to the tariff headwinds we're seeing from the U.S. Now, those headwinds have subsided significantly in the 90-day pause, bringing the additional China tariffs down to 10% with a 39% effective rate. So that's really positive. But the tariff announcements on April 2nd really did give the government the go-ahead to say, okay, now it's time for stimulus, for serious stimulus. And for JD, I think they will continue to benefit from these subsidies, but obviously I think the impact this quarter was quite significant. It might not be quite as significant in future quarters.
When you think about where the U.S. and China is with regard to tariffs, now that we have this 90-day truce period, how do you see that impacting investor sentiment when it comes to JD?
I think it's very positive for investor sentiment when it comes to JD. These companies, again, these are all holdings in our KWEB, China Internet ETF, KWEB, and so these are all very much impacted by sentiment around tariffs. Right, not fundamentally so. They probably shouldn't be fundamentally, if I'm being quite honest, because they do very little revenue from the United States. They don't export a lot to the United States. But sentiment-wise, these have been the China headline names. So any positive news on a deal will benefit these share prices. We saw this yesterday. So KWEB was up 6% and a lot of China internet names, of course, contributing to that. So just on a sentiment basis, these are very, very exposed. And we think we're going to have more positive news coming out with a trade deal. I don't think Americans were ever going to pay, 2 to 3 times as much for an iPhone, for example, which is what we would have actually been looking at had there been a longer term 145% tariff on China. Scott Bessent came out and said that we're not looking for a full-scale decoupling with China. That was never the goal. Trump is a deal maker. He wants to make the best
Yeah.
deal possible for the United States and start from, it really was, even as severe as the Liberation Day tariffs were, we still think it was just an opening gambit for negotiation.
Okay, just an opening gambit for negotiation. I want to get a quick final thought from you. When you talked about the food delivery and their expansion there, what are the signals that you're looking for on if JD.com is getting that right or wrong?
I think we need to look at their capex and how it's affecting their profitability. I think that they were very profitable in this quarter. I think next quarter we're really going to see, so in the current quarter, Q2, that's really going to be the test to see. I mean, their order volume is surging, but as well, there are so many promotions they're giving out. So in some cases, I've heard cases of where people were ordering a coffee and it was basically, given what the drivers paid, completely 100% subsidized by JD on that lower price for a coffee. So that it's kind of a market share grab going on right now. So it's very hard to tell. But profitability, I think we're going to see good headline growth, but profitability will be key to watch.
All right, profitability key to watch, especially with the growth in that sector. That's Henry Greene, investment strategist, Crane shares of JD.com higher right now.